Hello everyone, welcome back. My name is Jeff Smith. In today's video, we're going to take a look at the housing market 2021. I'm going to give you my expectations as to what I expect to happen in this new year with regards to home sales, buyer demand, inventory, all of that good stuff. We're going to kind of give you a progression of the year, how I expect it to start and where it's going to go from there. We're going to take a look at some of the most recent data from existing home sales to new construction sales. We're also going to talk about evictions and foreclosures, as well as the most recent mortgage forbearance talk that's out there, the discussions that have been happening with mortgage forbearance. And as you probably know by now, President Trump passed the additional stimulus today that is going to put some more money in the economy. It's going to pass additional stimulus out there. Now, while it might not be as much as is probably needed, it's going to help soften the blow, if you will, to some extent. But I'm going to talk about why I don't think that really plays into our 2021 housing forecast to start. But let's talk a minute about some of the most recent data that has come out and what you should expect over the next couple of weeks to coming months. So, if you've been following my videos for any period of time, we've talked about this for the last couple of months, how we've expected, new construction, existing home sales to actually come in less than expected as we move into, November and December months. And most recently, I believe on the 25th of this month, just a couple of days ago on Christmas Day, we actually got some data that showed that existing home sales were down nearly 2.5%. Now that broke a 5-month streak of existing home sales, more or less breaking records month over month. And then this month came in with a 2.5% decline. But as I've mentioned prior to that data coming out, you're likely going to see a decline. And it's not because the housing market has stalled. It's not because there's a bubble about to burst. It's because of the season that you're in. This is typical of the holiday season. Around Christmas, around Thanksgiving, things start to slow. You just have less people wanting to put their homes on the market. This year is exasperated a bit just because you have the pandemic out there. You have less people walking through their houses, even if they were willing to sell their property. And so that has essentially stalled the housing market to some extent. Now, buyer demand is still there because interest rates are still really, really low. In fact, we reached a new low last week with regards to interest rates, and I expect that to continue. But as we start the first couple of weeks of 2021, you're going to see more data that looks disappointing. The media is going to portray it as, that the housing market's about to crash, that there's about to be some big fall, and that all of this data points to a decline. When in reality, it's just you're in that part of the season where things typically slow down. And I expect that this is going to continue for probably the first 2 months or so of the year. You're going to see inventory stay low. You're going to see buyer demand appear as if it's not as strong. And that's because there's just less property out there for buyers to choose from. Buyers can't buy property that's not there. And as a nation, the last report that came out, we were sitting somewhere around a 2-month supply of homes. 2-month supply of homes means that if no new homes came on the market for say 2 months, essentially all the inventory in the entire United States would be gone. So less than 2 months supply of homes is very, very low. And that's across all price points. So you have less property for buyers to choose from. So with that, you have less buyers going into escrow, and the numbers are going to be lower than expected. Now, we just had the vaccine start to roll out. More and more people are starting to get it. So as more people get it, you start to get the herd immunity going on. You're going to see people more comfortable with putting their homes on the market, more people walking through their homes. You're going to see more people out spending money, additional stimulus coming into the market. And that's not only going to stimulate the economy, but you're going to have more properties come to the market, which is going to allow buyers an opportunity to find something closer to what they're looking for, which means you're going to have more buyers going into escrow, and numbers are starting to pick up. But the problem you have is that inventory is likely going to stay low through 2021. Now let's take a minute and talk about foreclosures and evictions, because a lot of people believe that that's the straw that's going to break the camel's back, if you will. And, my whole take on the foreclosures and evictions has been what it's been from the beginning, and that buyer demand is so high that I feel any foreclosures coming to the market are going to get purchased rather quickly by those buyers who have been looking for property for some time. But each state is going to be a little bit different in how they handle foreclosure. So some states, foreclosures may come to the market rather quickly. States like California, it's going to be a process. California is a very litigious state to begin with. The foreclosure process doesn't just happen overnight. You have to wait 90 days to file a notice of default, then additional time for the trustee sale, and so on and so forth. So it's going to be a while before you start to see foreclosures come to the market. But my guess is, because buyer demand is high, because of low interest rates and low inventory, these properties are going to get purchased rather quickly. The evictions is a different story. Now, evictions are going to happen, but they're likely going to continue. This moratorium that's been extended until the end of January is probably going to get extended again, in my opinion, until there's at least some end in sight with regards to the pandemic. As soon as we can start to see a little bit of light at the end of the tunnel, you're probably going to see them ease the moratorium, people back into the market, which you're going to have evictions, you're going to have people leaving properties. But just because people are being evicted from property, keep in mind, these aren't homeowners, these are tenants. And so just because you're evicted from the property doesn't mean that the landlord is going to now turn around and sell that property. A lot of landlords are going to put that property back on the market and rent it out to someone else. Now, you will have landlords that sell property and look to get out of real estate completely, but that's not going to be the majority of people out there. So evictions, in my opinion, aren't necessarily going to affect the supply. It's going to cause more homes on the market, but it's not going to be this huge flood that I think a lot of people think is going to happen. And even if property does come on the market, again, I believe buyer demand is going to be there in order to pick it up. So the evictions, the foreclosures, while it's probably going to get delayed, is likely less of something that's going to impact the housing market in 2021, in my opinion. The next thing you have is mortgage forbearance. Now, this is another topic that people believe that, because of all of these people who have taken mortgage forbearance, that when their mortgage forbearance is up and they have to start making mortgage payments again, that these people are going to foreclose on their properties, and that's going to cause the next housing crash. What I can tell you is that the banks out there right now are there to help these people. These people are allowed to miss their mortgage payments. So when you see 21 million people delinquent on their mortgage, a lot of those people that are delinquent have been allowed to be delinquent because they're in forbearance. Forbearance allows you to miss your mortgage payments. Therefore, you don't have to make them, but they're lumping all those numbers together and saying that these people are delinquent. Now, will people come out of this and some people foreclose? Absolutely. But as we've discussed before, people have more equity in their property than they've ever had before. So even if they come out of forbearance, they're no longer able to make their mortgage payment, chances are some of these people are going to be able to sell their property and walk away without having to foreclose, maybe walk away with some equity and be able to move along. Of course, you'll have some people that don't make their payments and foreclose on their property. But again, this is a process that's going to fold out over years, months. It's not going to happen in 2021, in my opinion. This is going to potentially get extended. As we know, FHA pushed their moratorium or their mortgage forbearance out until the end of February for homeowners to be able to file if they haven't done so. Fannie Mae and Freddie Mac haven't done that yet, but chances are there could be something coming from them that allows them to push it out even further as well. So you've got different agencies, different government agencies working with homeowners to try to ease the blow, if you will, with regards to properties being foreclosed upon, evictions, etc. So, while all of this stuff will have effects, I don't believe that it's going to flood the market with supply. And as we know, the housing market is driven on supply and demand. So as long as supply stays low, buyer demand stays high, and buyer demand will stay high because interest rates are going to stay low. You also have the largest pool of home buyers ever, which are the millennials starting to enter as prime buying age into buying property. So you have all of these buyers coming to the market, interest rates really cheap. You've got people working from home now. They no longer need to drive into a job. They can work remotely. They can work virtually. These people need a property that's big enough to accommodate that. So a lot of people are going to buy property so that they can have the space and the ability to work from home. You've got families that live in small properties that need to upsize because properties have been too small. They've been confined in these spaces with their family for the last 9 months and they're ready to upgrade. So you've got all of these factors playing into the housing market, which is going to keep supply low. The next thing I want to talk about is new home sales. Now, new home sales were down 11% below expectations. But keep in mind, we've exceeded expectations in new home sales for the last 7, 8, 9 months. So we've been well above where we should have been for the last, again, 7, 8, 9 months. And now we've declined, which just put us back to more of a normal level. You know, a decline like that after exceeding expectations for a long period of time isn't really something to concern yourself with, because all it is a normal, normalizing of the trend, if you will. So my guess is, again, while new home sales have declined, as the market starts to change into the new year, you start to see, inventory pick up. You start to see, us come out of the Christmas, the winter season, the winter market, if you will, fall market, however you want to put it. You're going to see buyer demand continue to pick up and new home sales will likely pick up with it. So that's my thought on new home sales and pending home sales. While existing home sales isn't out yet for the month of November, it comes out in the next couple of days. You're likely going to see a decline in those numbers as well. So, don't read into it more than the numbers suggest. Just keep in mind that it's cyclical. It's something that happens during this time of the year, and it will likely normalize as we move into 2021. So my expectations for 2021 are that it's going to be kind of a slow start to the year, not a lot of inventory coming on the market. Interest rates will stay low, buyer demand will stay high. As we move into, towards the end of March into April, you're going to see the housing market pick up like we normally do, but probably not at the pace that we've seen the last couple of years. I think you're going to have less inventory coming to the market because of people having super low interest rates on their homes. I think you'll have a lot of people stay in their property that were once willing to sell it. So I think you're going to have less property coming on the market in this year than in years past, which is going to keep inventory low. But I expect buyer demand to continue to thrive because of low interest rates. So you're probably going to have a strong housing market through second and third quarter of 2021, in my opinion, and then you'll start to see the normal slowdown towards the end of next year. I can't tell you where I expect price appreciation to be, but all the economists, the people that I follow out there are expecting somewhere between, say, 4 and 6% appreciation in most markets out there. So, while that is shocking to a lot of people, I believe that it's probably going to happen just because of low supply and high buyer demand, which again is the key driver of this market. So as I promised, I'll continue to update you as I get more information. I'd love to know your thoughts on the housing market. What are your, where you expect to be this time next year? If you're planning on buying or selling, why? I would love to know. And if you haven't done so already, do me a favor and hit that like button. And I appreciate you taking the time to watch. I appreciate your support as always. We'll continue to update you. Have a great day. Bye-bye.